Welcome to Breaking the News Plus. Today in Minnesota, the news is all things Target. An early switch of CEOs or an early declaration to switch in the early months of next year is hitting the business community by storm with gossip. And so to talk about it, we bring in the paper of record when we're talking about business, the Wall Street Journal. Sarah Nassauer has been writing about Target for some time. Sarah, thanks for joining us.
Thanks for having me.
So, would you say Target's announcement that Brian Cornell is going to step down in February and they're going to bring in the inside guy to replace him today was a surprise?
I don't think it was a huge surprise to many people. I think it was pretty well telegraphed by the company in sort of a classic CEO transition kind of way. But you can tell by the market's reaction, which was negative, very negative, that it wasn't what at least a lot of investors wanted to hear.
Yeah, your first sentence says it all. Target is down, and it thinks a lifelong employee can lift the company out of its funk. Investors aren't buying it. Why not?
I think that it's really sort of classic playbook that an outsider is a change agent, right? Michael, the incoming CEO, has been there almost his entire adult life. He started as an intern in 2003. I think a lot of investors see Target at a point where a real shakeup is needed. Michael's saying he can be that person. But again, it's just not classic playbook for a lot of investors, right? It doesn't always read in the way that a company wants to investors.
Right. Here at home, Target headquarters based here in Minneapolis, Minnesota. Here at home, this sell is, he's one of us. He knows the culture. He will bring us back to the Target glory years. That's what's being sold internally and here. But investors are a different beast.
Yeah, investors are a different beast. They're not upper Midwesterners necessarily. They don't necessarily find comfort in the similarity, the sort of like homogeneity of that. And so they're going to look at it differently.
Why did they do it now instead of February?
Well, I think traditionally, a company wants to sort of give, again, outsiders a sense of what's coming and insiders. And this is not, Brian didn't get fired today. He's going to be the executive chairman of the board. He is part of the transition. They want to do it in an orderly manner. February 1 is the start of the new fiscal year. That's very typical for retailers. So again, a lot of this feels very typical to me when it comes to sort of how CEOs, when it's not a super dramatic situation, how that process works.
You've done a lot of reporting as of late. Target has not had a good 18 months, 2 years, really since the end of 2023. What do you think is behind that?
I think it's a multitude of things. I mean, we've written extensively about fundamentally, it's about how shoppers feel about why they should come to Target versus someplace else, and how that's sort of developed in the sort of post-pandemic years. And you've seen a combination of things. One is sort of external stuff, right? Like inflation is sort of pretty persistent. Prices are much higher than they were a few years ago at this point, and shoppers are reacting to that and pulling back on discretionary spending. That happens to be a lot of what Target sells and is its bread and butter, right? So that's happening in the universe. We have tariffs, we have all these other things. But at the same time, shoppers are saying, this feels a little bit less relevant than it used to. Prices feel a little high to me. Stores feel a little messy, or out of stocks are a little high, right? And those are more self-inflicted things.
How much would you place, is there a way, because we've never been able to really quantify, Target pulling away from DEI, which here locally was a big deal. They were always kind of the darling of social justice movements, especially the queer community or African-American community. So they pull out of DEI or whatever terminology they used, which causes then a boycott. How much of that boycott has hurt Target?
It's unclear exactly. We can't get down to numbers, but last quarter, so not today, but last quarter, Target did say that response to that January DEI/belonging announcement reduced traffic. It hurt their sales. So they've acknowledged that it's had a financial impact.
One of the things that I read or actually visually, you had a graphic in your story today about share price performance, and it shows basically Target's the juggernaut up until the end of 2023. In 2023, and then you see this like a teeter-totter on steroids. It goes Target's up here, Walmart's down here, and then it goes like this, Walmart to Target. So is Target losing its customers to Walmart, and has Target got caught up in trying to be Walmart?
Mm-hmm. I think I want to just say stock price is one thing, right?
Okay.
But it doesn't necessarily show underlying business performance. But what is really clear is Walmart, which you have to remember when you're in Minnesota, you sometimes forget this, is a much bigger company than Target. It's massively bigger, right? And so when they're growing 2, 3, 4%, that means they're just vacuuming up market share from everyone else. So what we've seen is that Walmart sales have been very strong for years, quarterly sales for years, and Target's have not, right? And that really tells you, I think, what's going on. And for sure, Target is losing some market share in some places to Walmart, as well as Amazon. Amazon, another massive company that's almost as big as Walmart at this point in terms of annual revenue, is growing much faster than Target. So you see these two huge behemoths sucking up market share, and Target is struggling in that context.
That's a really great point. I'm actually not from Minnesota, but I've been here so long that I forget I'm not from here. And when you live here, there is a Target everywhere. But I grew up in Missouri, home of the Waltons, the founders of Walmart. And I grew up in a world where Walmart was everywhere and Target was just like sometimes every 50 miles. So it's different. To keep that perspective here for locals is important. The picking of Fidelki from inside, he talked a lot today about his vision seems to be core number one of bringing that Target unique experience. That's the thing that's going to take him to the promised land again, which then differentiates itself from those big retailers you talked about. Do you think that's the right strategy?
I don't know. I don't get a horse in the race, but it's clear that, he repeated this style and design as sort of the North Star phrase. When I spoke to him earlier this week, today with investors, in internal meetings today, he really wants to sort of show everyone style and design is our differentiating point. It can enable lots of other things. Like he talked about improving experience. He talked about leaning, faster into new technology, both, AI and newfangled stuff, but also just like back-end technology, right, that runs the business. But he used the style and design umbrella to try to get everyone to see what is different about Target. That's not new, right? That is something, if you go back to what Brian Cornell was saying when he started the job 11 years ago, he was also talking about reinvigorating trendy, products. It's something that has been part of Target's playbook for a long time. So we'll just have to wait and see if that is the right strategy. And of course, it's, harder to do than it sounds.
Right. So we've talked about shoppers having some frustrating experience, not getting into the store as much. We know what their Q2 earnings are, their Q1 earnings, not up to par of what they had once been used to. Let's talk about what you reported on a couple of weeks ago, which was an employee survey. So the people that work for Target, from top to bottom. Target tells me today what you reported was accurate. The numbers were accurate. So what stood out to you in that employee survey of all Target employees?
To me, it really shows that, the survey showed that I believe about 40% of, as you said, both corporate and store level workers that took the survey, not everyone takes the survey, but a lot of them do, 40% didn't have confidence in Target's future. That's a January survey. And that was a lower number than last year, right? This is something they do every year. And to me, it shows that internally, people are also thinking, what's going on here? What's our strategy? Where are we headed? And any business, we now have 2 years, right, or over 2 years of flat to falling quarterly comp sales, that doesn't feel great when you're working for that company. It means that there's belt tightening, right, and layoffs, and it's probably a little harder to take the work trip. There's just all the things that happen in a company when you're in that kind of phase don't always feel good to workers.
And what does any of today's news, what you've been reporting on since January or the last 2 years, mean for the upcoming holiday shopping season, if it means anything at all?
I think it's in some ways it's more the same, right? We want to see if some of these promised changes and improvements at Target are taking hold. One thing that Target folks were talking about today internally at headquarters is we're a show me story. This acknowledgement that now, the proof is in the pudding. You can talk about your strategy, you can talk about your plans, but you have to show results. And I think that's what everyone is watching for and waiting for.
All right, Sarah from the Wall Street Journal, we thank you so much for your time talking Target today.
Thanks for having me.
I'll see you next time. Appreciate it. Bye. That's all for Breaking the News Plus on this Wednesday night. Sure.